Hello, everyone, and welcome to another episode of the Market Pulse series. So these are record level. This is the 20th episode of the Market Pulse series. So we have come a long way. This is 20 straight weeks that we have been doing these. So remember, on Market Pulse series, we try and understand what is currently happening in the week and what we're expecting for the following week. So I see you guys have already joined early. Hello, Jack. Hello, Sultan Kamau. Hope Ofiti, thank you. Thank you, Nikosawa. So thank you guys for joining the session. As always, my name is Rufas Kamau, markets analyst at FX Pesa. So we'll be looking at a couple of things that are currently happening in the markets, a couple of charts, a couple of news. And once we get through the session, hopefully everyone will understand what's currently happening in the markets and what we are expecting going into next week. So let's get this started. So first things first, there's a chart that we are currently looking at. This is a chart of pound USD on the 4-hour chart. Clearly, there's a major support level happening here and also a major pattern that we are very familiar with. And this is called the double top formation. So it's clearer if you look at these on the daily chart. So for the last 2 years, the pound USD was on a bearish momentum. Then in 2022, the bearish momentum got stronger. And we saw the pound USD bottoming at 1.03299, which is basically very close to parity. So at this level, we were already talking about parity, where 1 pound would be trading at the same level as the US dollar. It would be 1-to-1, but we didn't quite get to that level. So immediately after getting to this low level, there was a very strong entry by buyers, which formed a very nice rally. So this rally lasted 3 months. So in the 4th month, we started seeing a pullback, which formed the basis for our neckline. Our market went up again, found resistance at the same level, and then dropped back down to the neckline. So this is clear for everyone. If you go to the 4-hour chart, then this is how it looks like. So our neckline seems to be a price level that is somewhere around 1.193. So every time the market has gotten to this level, has found good support. So in the last 2 weeks, we saw some very good bounce here. Then at the beginning of this week and last Friday, a very strong bounce here. And now what we are looking at is the market retesting the same level. So remember, the more a level has been tested, the higher the chance that that level will get broken. So there is a good chance we'll be seeing a break here. And it's one of the most anticipated price levels this week. So I am expecting a potential break of this particular trend line or horizontal line. And if price breaks 1.193, then perhaps we'll be looking to trade lower and execute positions towards the lower side. So far, there was an attempted bounce in the last 3 hours. So you can see the 2 green candlesticks that were headed higher, but then the preceding candlestick reversed trajectory. And now we could be testing the level again. And if we happen to break today's low, then there's a very strong possibility that we could be seeing the pound USD trading lower. So key level to understand and focus on is 1.193. So also, there is also the fundamental side of trading. So there is a lot of stuff that is currently happening in the markets. So I'll be trying to share some of these updates so that we can proceed well. So let's start first with this chart that was shared on Twitter. And this is the S&P 500 E-mini futures. So clearly, it's a longer-term trend line from 209, basically indicating the bull market that has continued within the markets. Then we had 2 straight months where the market was dropping sharply. This was February and March 2020. And then a continued rally all the way up until we got to the top of this bull market, which was on December 2021. So the entire last year was largely bearish, the market going down. And then in January, we had a very strong push up before February reversed the trend. So there's a good chance we'll be seeing the stock market continue to push lower. And this is in response to the Fed raising interest rates to pull liquidity out of the markets. And this is expected to weaken equities. So the S&P 500 could be dropping. So for the mini futures, for this guy, he is targeting an area around 2200. So this is 2260. So there could be a chance that the stock market will continue pushing lower this year. And the projection is that it goes all the way to the 2020 low. So with that in mind, if you look at what's happening with S&P 500, we are well on course to fourth straight week. The market is pushing downwards. So from here, you can see the market opened here and closed lower. This was an attempt to move higher, which was eventually erased, and the S&P 500 closed lower. Then on the third straight week, market closes lower, and then this week attempted to go up and then kept pushing down. And there's a potential we'll be seeing the S&P 500 close lower than the open of the week. So in the most recent price action, we managed to capture a couple of trades here. So this, by meaning we captured a couple of trades, it was resulting from the analysis that we've been doing daily on the market snapshot series, which happens Monday to Thursday at 11 a.m. So we try to identify these extreme price levels along the upper trend line and then look for short selling positions. So today, early in the morning, was a continued momentum downwards as a result of the bounce here. And now, this afternoon, we have seen 2 consecutive hours where the S&P 500 was attempting to go up, but then in the last hour, we saw some weakness, so perhaps even some further downside for the S&P 500. So it's a similar case for the Dow. Every time you go to the trend line, found selling opportunities before the most recent break 2 hours ago, but I don't think this has the necessary momentum to move higher. So potentially some further downside will be happening in the Dow. So for the US Tech 100, it's a similar story. So every time the market goes to this particular trend line on the 1 hour chart, then we have seen some further downside. So last 2 hours, an attempt to go up, but not yet level of interest. So our levels of interest, as always, have been on extreme price levels. So potentially, if this was to rally and get to this area, then it would make a lot of sense to start now looking for continued momentum downwards. So as per now, I'm not participating. So I would be patiently waiting to see another short selling opportunity. So as we progress, you should know that this is a very open and interactive session. So if you have any questions relating to the presentation, then feel free to type those questions in the live comment section, and I'll be responding right away. So let's proceed. So I want us to focus on the key highlight news for the week. So one is from ECB Schnabel. He basically mentioned that the balance sheet is bigger than needed for policy stance, basically meaning that the European Central Bank needs to continue with tightening. At the same time, yesterday, we also saw the Fed chair, Christine Lagarde, basically saying that the inflation is very high and 50 basis points move is on the book. So potentially we'll be expecting a 50 basis point hike on the next ECB meeting. So from Schnabel, market expectations about how balance sheet will evolve in the coming years are estimated to have reversed around 40 basis points at this peak impact since September 2021. So the large ECB asset stock may undermine the inflation fight. So European appreciation implies lower inflation pressures ahead. So also there's more news that came in this afternoon. One of them, JP Morgan raises forecast for ECB terminal rate to 3.75% by June from 3.50% previously. So with the expectation that the ECB could go for a 50 basis point hike, so this would move interest rates from 3 to 3.5%, and now potential 25 basis point hike in between, which would eventually push European interest rates to 3.75. So from a prior prediction of 25 basis points increase, JP Morgan now anticipates that the ECB are boosting interest rates by 50 basis points in May. So initial jobless claims from the US came in at 190K. And also there was additional data indicating that there is a much tighter labor market. So what we saw from the jobless claims, there was also revised non-farm productivity quarter over quarter, which moved up 1.7%, but lower than expected. But then the revised unit labor costs rose unexpectedly to 3.2%, basically indicating a much tighter labor market. So whenever you see revised unit labor costs are going higher, then you expect the companies to be fighting strongly to retain talent as well as to recruit new talent, and these are American companies. So yesterday, in a speech by Fed's Kashkari, he basically mentioned that the current U.S. economy is in a tight, I would say, hot, acutely hot labor market. Basically, meaning that the economy is expanding so much higher than the number of jobs available. So on one side, he was quoted basically talking about population growth being on the slowdown. So the number of new job entrants is very slow, and he mentioned that they could be looking at immigration to fill the gap. So with the economy being resilient and labor unit costs rising, it basically means that more people will have more money, where companies are competing for the available labor, and these will lead to more inflationary pressure. So as a result of these, markets have reacted by betting that the Fed will go for a stronger rate hike. So what we are seeing in the markets is the market reacting to that information and the dollar strengthening against other currency pairs. So earlier on in the morning, around lunch hour, we had the European inflation data coming in at 8.5% compared to a previous reading of 8.6%. So it was down on the year, but it was also indicative of a strong hike in inflation in the month of February. So Italian CPI, or Italian measure of inflation, also jumped 0.3% compared to the previous month of 0.1, indicating that the inflation is getting sticky, or what we would say is inflation is getting enshrined. And this is the real risk that a lot of central banks are trying to avoid. So in response, we expect the ECB to go for a 50 basis point hike, and this would eventually strengthen the euro. So as for the unemployment rate in the Eurozone, jumped from 6.6% to 6.7%. This is within the line of what the ECB is expecting. So the US is seeing the exact opposite. So yes, the Fed is very aggressive in hiking interest rates, but also the unemployment rate is getting smaller and smaller. And right now they are at a 44-year low, and that's a big problem for the Fed. So as a result, out of our investors have turned to buying the US dollar. So looking at next week, and this will be very important. Just trying to click on calendar here. So before we even get to data for next week, let's look at what we're expecting tomorrow. So midnight, FOMC member Waller will be having a speech. 2 a.m. FOMC member Kashkari, then Tokyo core CPI. So these are an inflation of the Tokyo province of Japan. Previously, 4.3%. We expect this to slow down to 3.3%. And also the unemployment rate in Japan, which stood at 2.5% in the previous reading, we expect it to remain the same. So besides this, we'll be looking at Chinese Kaizen Services PMI, which is an estimate of the services sector in China and how it's performing. Then we'll be looking at German trade balance, French industrial production, Spanish services, Italian services, French final services, German final services, then the Euro final services at 12 p.m. Then we'll be looking at the final services PMI for the UK before we look at the producer price index for the Eurozone at 1 p.m. So most important news will be the ISM services for the US, and these will be happening at 6 p.m. Then we'll have Fed member Logan speak at 7 p.m. before we look at the Fed monetary policy report, and this is tentative, would even jump into the weekend. So that's not the most important part. The most important part in our preparation looks at next week, which will be NFP week. So after seeing a record rise in the number of jobs created in the US in January, investors are waiting to see whether this particular trend continues, and they want to see the February data. So next week on Friday, we'll be looking at the non-farm payrolls from the US. The expectation is not yet posted, but the previous reading was 517K jobs created. So there will also be focus on average hourly earnings or the rate at which wages are growing in the US. So these two data points will be very important, and there will be similar information coming from Canada. So we'll be looking at the employment change in Canada as well as the unemployment rate. So besides these, we'll be looking at the UK GDP month over month on Friday next week, and also the BOJ press conference following the policy rate. So the Bank of Japan now has a new governor, but the policy doesn't seem to be changing. So the new governor has reiterated that he's looking to maintain the same policy, and he will be looking at data coming from the economy in order to respond or potentially change policy. So current policy maintains that they are doing yield curve control at plus or minus 0.5%, and maintaining low interest rates at negative 0.10%. So this BOJ press conference will be very important, as investors will be looking to hear directly from the new Bank of Japan governor. And of course, we expect a lot of questions. So the responses to those questions might influence the JPY movement. So also there will be a monetary policy statement, and this will be on Friday. So it will be an action-packed Friday. So we expect a lot of volatility from the JPY, GBP, Canadian dollar, and the US dollar. So looking back to Thursday, we'll be looking at the Chinese inflation data. So previously 2.1%, we expect something similar along those lines. So producer price index also for China. So remember, Chinese stocks have been leading the rally this year, following very easy monetary policy from the People's Bank of China. So if this is maintained and inflation remains low, then that could be very bullish for Chinese indices, Chinese equities, as well as the Hang Seng index. So Japanese GDP will also be released on Thursday. So this is also a very important data point. Then on Wednesday, we had we'll be having the Bank of Canada rate statement, interest rate data, and also a speech by Fed Chair Jerome Powell, followed by JOLTS job openings. So Canadian dollar and US dollar will be very volatile, also adding in between the ADP non-farm employment change. So early in the morning on Wednesday, we'll be having RBA Governor Lowy issue a speech, and in between we'll be having out of our retail sales data coming from the European region, and also a speech from ECB President Lagarde. Then on Tuesday, Australian interest rate data. So previously 3.35%, following closely after the interest rate data will be the RBA rate statement. So investors will be following up on these. Out of volatility will be expected for the Australian dollar. Fed Chair Powell will be testifying at 6 p.m. on Tuesday. Also, SNB Chairman Jordan will be issuing a speech at 8:30 p.m. and this is bound to affect the Swiss franc. So going all the way back now to Monday, we'll be expecting inflation data from Switzerland. This will be at 10:30 a.m. So previous inflation data was at 0.6% change. That was in January. So we'll be focusing on this to see the February data. So also retail sales for the European region, month over month, will be released on Monday at 1 p.m. So previously negative 2.7%. So a change in this might affect the ECB policy decision and outlook. So investors will be following up closely before looking at the retail sales in Australian dollar. So that's the outlook for the week. Action-packed. Remember, this week was majorly technical. We were basically trading based on technical price levels. But whenever the economic calendar is action-packed and there's a lot of stuff happening in the markets, then we tend to look at this news, interpret this news in order to identify trading opportunities. So that's it for the economic calendar. And now we focus on the various charts and try to understand what's currently happening in some of these charts. So one of them is US Tech 100. We have already covered this. So Brent oil has been one crazy. Okay, I'll have to censor myself here. I almost said something that could get me fired. So UK oil, clearly from the daily chart perspective, you can see the particular path that the UK oil is taking. So this is clearly a slightly bullish trend, and this is on the daily. So on the 4-hour chart, if you zoom out, you can notice that we were on this swing and then we broke towards the upper side, retested the area and pushed higher. So it seems like we are on an upward swing. And this is getting very technical. So if you look at the key price levels, this support is holding up quite well. So if you are to change the trend line to reflect the most recent lows, then I would use these, and then we would have a trend line that is following this path here. So if I zoom my chart, you can see the different swings and the way the market is bouncing from these. And now what we are observing is a very strong rejection of even higher prices. So we have one of my favorite candlesticks forming here, the shooting star. So the shooting star, or sometimes referred to as a pin bar, is indicating a rejection of higher prices, and immediately after the current candlestick is seemingly reversing. So I'm still very bullish on oil. So whenever I see these, it's indication of exit from the bulls and entry by sellers. So whenever the market gets to the lower trend line, I tend to consider that as a good area to look for potential bullish positions. So if this keeps on playing out and the market gets to the lower trend line, then my idea is to potentially look for a buy position here and continue trading along the trend as price continues pushing higher. So that's the outlook for Brent oil. Bitcoin continues moving further downwards. Let's see the chart. Awesome. So this Bitcoin made a surprise rally, and this was in February, but since then got into this pattern, which looks like a bearish wedge. Then it broke towards the upper side. So after breaking higher, you can see the pullback to retest the area, and automatically from this level, if it was a genuine break, you expect a retest and then a continued push higher. However, what we are seeing here, even using a shorter time frame, such as the 15-minute chart, you can all observe that this is a continued resistance that is being rejected, and price is increasingly obeying the pressure to move down lower. So if we ignore this sharp drop here, which saw the market getting back into formation here, then it's clear that it's trading within a tight range and could eventually break lower if this selling pressure continues. So the most recent bottom was around 22,840. And if this continues, we could see a very sharp spike dropping all the way down to 22,840. And that could be a really nice move to capture if you're on the short selling side. So as for the UK 100, this remains the same pattern. So market seems to be bearish. Every time it gets to this particular trend line, finds resistance and drops. Same case here, and now you can see that the market is testing this area here. So any indication of strong bearish entry would warrant to go a position to go lower, perhaps targeting the day's low or even lower. So that has been the story of the UK 100 or the FTSE 100. So potentially we'll be seeing this happening. If there's a break, then we head higher to the previous high. So as for the Chinese currency, that is the renminbi, but we normally use the term yuan. So Chinese yuan has been on a bullish trend where the dollar has been strongly rallying against the Chinese currency after forming this double bottom pattern, which is a classical reversal pattern, in this case, bullish reversal. So it tested the area for quite some time and then rallied all the way up for 2 straight weeks before pulling back. So on Monday, when we heard the news, not on Monday, but on Wednesday, when we heard the news of Chinese manufacturing, it led to a very strong rally. That is the Chinese currency gaining against the dollar. But once it got to this level, we have seen a very strong recovery, and the dollar continues being strong. So there is a lot of commentary that the Fed will go for stronger rate hikes, potentially 50 basis points, and keep on going, keep rates higher for longer. It seems to be the common term now. I remember, I think similar time last year, the most common term coming from Fed members was that inflation was transitory. So inflation went ahead and peaked at 9.1% before pushing down lower. In the most recent reading, it was 6.4% in the US. So with inflation reading 6.4%, the Fed is very adamant on pushing it back to target of 2%. And in order to achieve this, the Fed is going for stronger rate hikes. So in that case, investors are betting on a strong dollar, and that explains why we have a very sharp recovery here. So the Chinese currency would be getting back on track. It's almost like a V-shaped recovery if you look at it from the 4-hour perspective. And then from the daily chart, you can see last year it was majorly bullish. So right from January here all the way up, we saw the peak happening here. This was on October 25th. Since then, there was a lot of profit taking and sell-off, then a bottom here and then a rally. So there is a good chance we'll be seeing the US dollar continue rallying against the Chinese currency. So any form of pullback might be taken as a potential entry point by buyers in the market. So clearly a very good day for the buyers who bought in the morning, and potentially towards the end of the week, we'll be seeing some further upside. So if you have any questions relating to the presentation, feel free to type them in the live comment section, and I'll be responding to that right away. So good question from Malombe. Would I get an online link to attend the webinar on Saturday online? So on Saturday, we will not be having a webinar. I want to clarify this. So we normally do what we call financial literacy events, and we focus on different towns. So it's majorly networking events, getting to meet our traders and help educate our traders about personal finances as well as investing. So the current event will be at Urban Point Hotel in Eastleigh. This will be on Saturday, this Saturday, and it will be a physical event. So if possible, kindly secure some time, register, and then get to attend. The event is free of charge. And of course, there will be refreshments provided. So hello, Paul Njoroge. Thank you. Thank you for your comment and response and feedback. So as we proceed with today's presentation, also I would like to share a more recent article here. And this is coming from FX Street. So from the Lagarde speech, the case for a 50 basis point rate hike this month is still on the table as inflation is still too high. So as we think about this, it's very important to know how currencies have been performing. So if we go to the FinViz website, we look at Forex and then performance, then 1 month. Then you can see for the last 1 month, the US dollar has been the strongest currency against its peers, with the Japanese yen losing the most to the dollar, down 6.05%, Australian dollar losing 5.13%, New Zealand dollar 4.18%, Swiss franc 3.14, euro 2.93, pound 2.37, and Canadian dollar 2.26. So this is a big loss, especially on the Japanese yen. So we expect this particular trend to continue as the Fed remains adamant on hiking interest rates for longer. And this aggressiveness is basically making US bond markets very attractive. So for investors, they are looking at the US bond markets, especially the short-term 2-year bond, as very lucrative. So they are preferring holding onto cash. So cash reserves are really good. And when they invested in 2-year bonds, then they create even higher demand for the US dollar. So with this happening, then pairings might make sense. Looking at these currencies on this far end compared to these currencies on this other end. So it makes sense to trade a strong currency against a weak currency. So one of the favorites for the week and for the month has been trading the US dollar against the Japanese yen. So once you find this pairing, then you still have to do your technicals and identify the potential movements. So in the last Market Pulse series, we took a bit of time talking about USD JPY, and we managed to enjoy some good break. So just to put this in perspective, I remember us discussing this. So this was USD JPY. So last Friday is when we had this break. So on Thursday, we were looking at the USD JPY testing this area here. So we were looking for a potential break. So the break did not happen here. So the market pulled back, showed some very strong rejection on the lower trend line on Friday, and then managed to rally, creating a very nice momentum opportunity all the way up. So we are still holding on to the trade, then you are still holding on to the money, and there's a good chance we'll be seeing some further upside. So now, coincidentally, there's a resistance here, and the market is testing the same resistance here. So the market is looking at a potential break. I know we had a break here earlier in the day, which was reversed immediately, but now we are seeing another break, which is indicative of buying pressure. So from the forward chart, you can see the candlestick with a long lower tail indicating rejection. So we might be looking to trade a bullish position in USD JPY between now and tomorrow. And hopefully we get to close the week on a high and make some good pips out of this. So this remains one of the best positions to think about, especially this week, since we don't have a lot of news happening in the market, and most of the news are expected next week. So on the NFP week, Bank of Japan interest rates, Bank of Canada interest rates, all that will create unnecessary volatility for a technical trader, causing a lot of levels to be broken, others retested, and so on. So not the premium trading week for a technical trader. So for this week, remains very nice. You just have to observe the key price levels and then trade the existing or the prevailing trends. So still, I want to see your comments. What are your thoughts about gold? Very bearish on gold. Have you analyzed US oil? Yes, I've already done that. We have covered Brent. So we have not covered US oil, but there is like a 95% correlation between Brent and US oil. So if you're trading Brent and also you're trading US oil, tends to be the same. So in this case, I'll be answering the question from Paul Njoroge. This is regarding gold. So gold prices seem to be quite bearish. So from what we are seeing here, forgive my chart, it's too noisy. So what I have here is key highlights of some key price levels of or zones. So let me zoom out my chart so that it makes sense to everyone. So I'm tracking this particular bearish channel that lasted quite a number of days, actually a number of weeks, where gold was consistently going down. So the three funny lines are basically the moving averages. So this is the moving average of 200, simple moving average. This is 100, and this is 50. So 50 tends to be very close to the candlesticks and keeps on responding to price action faster. So clearly 50 has broken 100 and 200, indicating bullish momentum, but the overall movement seems to be bearish if you take this channel seriously. So from this bullish momentum, it was a very strong bounce from $18.06 price level. So after breaking this particular trend line, there was a retest and then a rally all the way up to this resistance, which was acting as a resistance a couple of weeks ago. And this is 1846. So from there, if you focus on the price action for today, there was a lot of expectation that this resistance was tested and gold will continue pushing down lower. However, there was a lot of noise. You can see gold attempting to go up, sellers coming in, buyers coming in, sellers coming in, and this looks like a tug of war. So this explains why I had highlighted this area, which is an area you probably avoid. You don't want to be buying and selling here. So you want this unidirectional movement. This is the most profitable one when the market is moving intentionally in one direction without a lot of noise back and forth. So now it seems like these attempts to move prices higher are being rejected, and judging by the higher tails on the upper side, then it may be indicative of a strong entry by sellers, and we could be seeing gold complete this swing towards the lower side. So this was the breakout point, a retest of the same. So if gold was to go back down, then my potential target entry would be targeting 1822 as a key price level for gold. So on the forward chart, this is how it looks like. So you can see the forward candlesticks have long upper tails indicating rejection of higher prices and potential entry by sellers. So we could be seeing prices move down further towards the lower trend line. So I hope I've answered your question. Audio, I don't know if I lost my audio, so kindly confirm, everyone. Hello. So from my side, audio seems clear. So I don't know whether you can hear me from your side. So for those who attend the morning session, I remember mentioning yesterday that Salesforce showed very strong growth in earnings, beating expectations and also expanding the outlook. And this led to a massive buying during the pre-market trading. That was yesterday. So after this, you can see that the price jumped all the way up and opened at around $191 per share. So this was a huge, huge jump. And you can see a lot of profit taking happening here. So this was roughly about 14.05% jump. So I expect this stock to continue making a recovery. So from the forward chart, this is what we have. And from the daily chart, this is what we have. So market that was largely bearish. And this is since October 2021, dropped all the way down, then broke this particular trend line, retested, and then jumped higher. So if you break the $193 price level, then we'll be expecting to see even higher prices. So potential targets remain on this particular resistance here. So 221 would be a nice target. So